Let's go! So ever since the big crash, people have been calling for a bear market that in fact we are right now watching the start of the bear market. Whether or not you believe that for yourself is of course completely up to you, but regardless of if we are actually in a bear market or not, there is no denying that a lot of coins have seen huge drops in price all across the board during the I would say last couple of weeks, 2 weeks basically, and especially this last week. So this can of course be scary for anyone because even if you have been in crypto for a while, no one likes to see whatever they hold go down in price. It's just it's one of those things. You don't want to see Bitcoin go down in general. You don't want to see your portfolio drop by 55%. But especially for people who are newer to crypto and are being told that this is what a bear market looks like and that everything is just going to continually go down, of course, this is going to be very scary. But in reality, this is not the case. Things just do not go down in a straight line. In fact, it is still very possible to make money during a bear market through trading or by finding a small handful of very promising projects to hold. So guys, we are going to try to figure out here, if we continue to go sideways or down, how should we play this market? Now, I am by no means saying that we are in a bear market right now. In fact, if I had to take a guess, I would say that we are not in a bear market and things are going to get up rather quickly here again. But I'm not a financial advisor. And if we continue to go sideways, is there something we can take as a kind of clue as to what is going to happen? If we look at the bear market of 2018, and we can look at how the altcoins performed back then, if there is some kind of pattern or characteristics we can look for in order to try to project which altcoins are going to do well, if this is going to be the next bear market, or if we are starting to see the start of a bear market right now. So before I get started, of course, make sure to subscribe and activate the bell right now. So to start off with, there are some very important differences between investing during a bear market and during a bull market. Of course, one of the most important of those differences is how you should take profits. During this bull market, one of the main concerns people had when taking profit was that they would be missing out on more upside, as a lot of time coins would just continue going up even after doing multiple excess of their initial prices. But during bear markets such as 2018, there were still projects that had strong runs to the upside, but it was almost guaranteed that they would decrease back down in price afterwards. For example, if we look at this article of altcoins that was released in April of 2018, it shows that these were the coins that had the biggest moves to the upside, but that they had already gone back down from the highs they created. Another thing we can take away from this is shown right here. So the percent gain in the larger font size is the return that these coins gave against the US dollars, and the percent gain beneath them is the percent gain they gave against Bitcoin. And as you can see, all of these coins did more than 100% against Bitcoin, which shows that even when altcoins are not doing so well against the dollar, they can actually do very well against Bitcoin. So you could actually use them to accumulate more Bitcoin, which, as you know, if you've been following my videos, is my ultimate end goal. Now, if we get into some characteristics, the most common thing that many of the coins that had periods when they went up during the bear market was that they were new. This article was released at the end of December of 2018, and at that point, not a single altcoin that had been tradable at the start of the year was on track to finish the year up in percent against the dollar, meaning that if you bought a coin on January the 1st of 2018 and just held until the end of the year, you had lost money. The reason that newer coins were not hit as hard during the bear market is that because they were released after the bull market, there were not huge numbers of people who had bought at way higher prices looking to sell it and get out of the project to avoid losing any more money. When there are people holding from much higher prices, anytime a coin would experience a move to the upside, it would immediately get driven back down by the selling pressure of those people looking to take advantage of the slightly higher price to get out and move on. So in other words, you want to watch for coins who don't already have huge numbers of bag holders who have been buying from much higher prices. So the newer coins that released after everything else had crashed did not have this problem, as usually most investors got in at around the same price. There are of course ICOs, pre-sales, and other initial offerings where certain people get in at lower prices and dump later on, so those must be avoided as well, of course. One other characteristic to look for is the ability to earn passive income through staking or some other method. If a coin allows its holders to earn more of it by staking, providing liquidity, farming, or some other method, then its holders are more incentivized to continue holding it than if they could not earn income from it. This means less selling pressure to drive the price down, and if you can earn more of the coin over time for free, then that is going to help to lower your average effective purchase price. A very simple example of this would be if you bought a coin for $10 and then staked it and earned another coin, you then would have 2 coins but only have spent $10, making your average effective purchase price $5. So with what we have looked at so far, the ideal altcoins to invest in during a bear market would be coins that are not very old, that had a fair launch without people getting in at far lower prices than everyone else, and that offer some way to earn passive income from them. One specific category of coins that I think could do very well in the future, as many of them will likely fit all of these characteristics, would be coins that launch on Cardano actually once smart contracts are fully implemented. It is possible that for once, Cardano's slow development could work in its favor, because if smart contracts come during a bear market, then it is likely that there will not be as many scammy projects trying to make some quick money, and there will be more real projects with fair launches. Also, we already know that Cardano will be focusing a lot on development and growth of the DeFi ecosystem within the network, and many DeFi projects offer ways to earn passive income with their tokens. This is something that I will definitely be keeping you updated on, so if you want to be kept up to date on projects on Cardano or projects launching on Cardano, make sure to activate the bell for post notifications. If you are holding Ethereum or plan to buy Ethereum at these levels, or if we dip even lower, you may want to consider buying Lido staked Ethereum instead. While Ethereum does not fill all of the characteristics I have covered, if you hold STETH instead of normal Ethereum, you are paid out daily rewards from the Ethereum staked for Ethereum 2.0 that backs the STETH token. There are already more than 400,000 Ethereum staked with Lido, and it has been audited by QuantStamp and multiple other security firms to ensure its safety. Basically, STETH functions the same as normal Ethereum and reflects the same price as normal Ethereum thanks to its one-to-one peg by the staked Ethereum. The big benefit that comes with it is that usually if you stake Ethereum for 2.0, it is stuck in the contract and you cannot really do anything with it while it earns you rewards. By providing stakers with STETH, users can benefit from staking rewards and then do something else with the STETH, such as earn yield on it somewhere else as well. So you can use it as collateral for a loan or whatever else you wish to do. Something similar you can do if you wish to hold Bitcoin is hold a wrapped version of Bitcoin and then use it to earn some yield in a DeFi protocol on Ethereum, the Binance Smart Chain, or some other chain. There are several different Bitcoin wrapping projects that you can choose from, such as Wrapped Bitcoin itself, Ren, Strudel, and others, but it really depends on what chain you want to use and personal preference as to which of those projects you should utilize. As I mentioned earlier, being able to earn more of a coin while holding it through a dip can help to lower your average price over time, which is of course always good. And this is a great way to do exactly that with Bitcoin and Ethereum. I think that the characteristics I have covered is a good thing to look for, but let me know down in the comments if you have any others which should be included, or if you know of any projects you think are going to hold up very well if we are indeed entering a prolonged bear market. Let me know down in the comment section and I will see you in the next one.